just cast our mind back to 2008-9 after that disastrous banking crisis.
What do people whom you talk to think about the state of the UK economy?
I have a view that we really do knock ourselves more than we should. I mean, let's recognise what we've got. We've got three of the top universities in Europe generating great research that is commercialisable. So look, I think the announcement about the National Wealth Fund had three big issues.
Welcome to Talking Markets. I'm Michael Wilson, joined by my colleague and veteran city commentator, David Buick.
Welcome to the party. Welcome.
Well, nice to see you. And I'm very, very pleased to say we're joined by our special guest this morning, Louis Taylor, who is CEO of British Business Bank.
But I think there's a really important issue in all of this. I mean, the companies we're backing, particularly the ones that really start to scale up and then need more capital, like Pragmatic, to build a plant in the UK and commercialise what is now proven technology, they're the feedstock for AIM and for the London Stock Exchange, because they will go public at some point. And it's a really important
role, isn't it?
Role for us to have. But it's really important there's a pipeline of those opportunities. Why have there been fewer IPOs in the London stock market? I'd argue that a lot of it centres around a reduction in risk appetite from institutional investors over a long period of time, and a de-equitisation. So UK pension funds now hold 4.4% or 4.4% of their portfolio is UK equities, and that's a massive de-equitisation. And it's also reflective of a decrease in risk appetite as well. Because they're not really that much more invested in equities more broadly either, particularly relative to other successful pension systems that we see elsewhere. So the lack of liquidity, to an extent, has made London perhaps a less attractive market than it was. And I think it's important that we put some risk appetite back into investors' mandates in order that they are actually supporting the growth economy. Because it's the case that a lot of the companies we invest in, most of the money, other than ours, is coming from US venture firms. And once you've got US venture capital, well, not only in your cap table, but also on your board, the likelihood of you listing that company in London is suddenly diminished materially.
What do people whom you talk to, whom you think about investing, what do they think about the state of the UK economy?
Well, look, just to preface that, I mean, I have a view that we really do knock ourselves more than we should.
Absolutely.
Our startup culture is actually very, very strong. Our scale-up culture is pretty good, but crikey, on both of those, we could be so much better. But if we start from a slough of despond, it's very difficult to get traction to move. So, I mean, let's recognise what we've got. We've got three of the top universities in Europe generating great research that is commercialisable. And if we back these companies, we'd have a much more vibrant growth economy that's feeding into AIM and London Stock Exchange listed companies and growth and employment. So I think, not doing ourselves down too much is really, really
But
important.
you say all that, don't you? I mean, what sort of response do you get from government when you talk to them and say those kind of things?
Well, people generally say, actually, you're probably right. But I mean, we do know.
That's the point, isn't it?
It is.
It's very difficult to get that through to politicians
I think
right now.
also a lot of it comes through, I don't know whether Louis agrees or not, but when the country voted Brexit, the larger members of the business community were despondent, no question of it about it. And has Brexit worked to its full extent? Absolutely not, because it got COVID and various other things in the way. And I don't think, if I'm really honest, that the previous administration did enough in terms of promoting business abroad, because they could have used taxation, all kinds of things to do it. This is something that I hope that Jonathan Reynolds and his team and others will help you and others turn this sentiment around. I don't know whether you agree with me, Louis, but sentiment's everything. And if sentiment's positive, you've got a chance of getting out of the blocks.
Sentiment is really important in an economy, and it's self-fulfilling to an extent. We're not in La La Land, so I mean, a Panglossian view on everything is as damaging as being overly pessimistic as well. So things are never as good or as bad as they seem. But look, I mean, we've got some sectors that are terrific and world-class. We've got an environment that is seen as being competitive, not as competitive as it was, but with the potential to be the most competitive business environment in which to establish and grow a business. And I think the I was in a conversation the other day, and a really great venture capitalist said, we've got to pick the right race. Our race is not only about individual sectors, but it is to have an economy that is the best place to start a business and to grow a business. Because if businesses get fed in an economy, then opportunities will come to that economy to be fed. And so I think it's really, really important that we do shout about the positivity around the UK. The government's holding an investment summit in mid-October. Previous government held a couple of those as well. They're very successful in highlighting the advantages of the UK, which are myriad.
And you can listen to the full version of that podcast wherever you get your podcasts from.